Well, folks, another earnings season has begun, and Barrick Gold started it off with a bang, posting a massive 108% jump in net earnings for the fourth quarter of 2024. Viewed as a leader in the gold space due to their absolutely massive production profile, Barrick is up 17% over the last month as gold continues to run. And while these earnings are a good sign of what's to come in this environment, let's dive in. Okay, let's start off with the high level. Barrick this week posted fourth quarter net earnings of $996 million, or 57 cents per share, which represents an improvement of 108% on a year-over-year basis from $479 million, or 27 cents per share in the fourth quarter of 2023, driven largely by a nearly $700 an ounce improvement in the realized price of gold. Adjusted net earnings came in lower at $794 million, or 46 cents per share, which was still a 70% improvement on a year-over-year basis from $466 million, or 27 cents a share. Attributable EBITDA for the fourth quarter of 2024, meanwhile, came in at $1.7 billion. For the full fiscal year, Barrick saw net earnings of $2.1 billion, or $1.22 per share, which is nearly double the $1.3 billion, or 72 cents per share recorded in 2023. Attributable EBITDA for the full year totaled $5.2 billion versus $4 billion in 2023. While Barrick saw a big boost in earnings for both the quarter and the full fiscal year, the real story here is the rising price of gold. For the fourth quarter, the average realized price on a per ounce basis totaled $2,657, as compared to $2,494 an ounce in the third quarter of this year, and $1,986 per ounce in the year-ago period. A rising tide lifts all boats. On an annual basis, the average price jumped from $19.48 an ounce to $23.97 an ounce. The price performance of copper, on the other hand, has been less spectacular. The fourth quarter saw the average realized price come in at $3.96 a pound. While still an improvement over the $3.78 a pound recorded in the fourth quarter of 2023, it was a decline from the $4.27 per pound figure recorded in Q3 and brought the overall average down for the full year. 2024 as a whole saw an average realized copper price of $4.15 a pound versus $3.85 last year. This overall rise in metals prices, as you can imagine, has also had an impact on cash flows. Net cash provided by operating activities grew to $1.4 billion in the fourth quarter from $997 million in the year-ago period, and jumped from $3.7 to $4.5 billion on an annual basis. Free cash flow, on the other hand, dramatically increased, climbing 268% on a year-over-year basis from $136 million in Q4 of 2023 to $501 million in Q4 of 2024. For the full year, free cash flow improved 103%, climbing from $646 million to $1.3 billion. Lastly, the company also maintained their 10-cent per share dividend this quarter, while announcing a new $1 billion share buyback program after having spent $498 million in 2024 repurchasing shares. Barrick ended the year with $4 billion in cash and cash equivalents, while debt, both current and long-term, totaled $4.7 billion. Okay, so the numbers are great, but how did the operations actually do? Production in the fourth quarter came in at 1.08 million gold ounces versus 1.05 million ounces in 2023. Those ounces were produced at an all-in sustaining cost of $1,451 an ounce versus $1,364 in the year-ago period. For the full fiscal year, Barrick managed to achieve guidance, with 3.91 million ounces of gold produced versus 4.05 million ounces in the year-ago period. All-in sustaining costs for the full year totaled $1,484 an ounce versus $1,335 an ounce in 2023. Copper production, meanwhile, totaled 64,000 tons in the fourth quarter versus 51,000 tons in the same quarter last year. All-in sustaining costs on a per-pound basis came in at $3.07 versus $3.12 in the year-ago period. For the full fiscal year, 195,000 tons of copper was produced, which came in right at the guidance midpoint for 2024, versus 191,000 tons produced in 2023. All-in sustaining costs grew from $3.21 per pound in 2023 to $3.45 per pound in 2024. These numbers, of course, are despite operational issues that Barrick has faced in Mali, as a result of the ruling government demanding higher royalties on all gold mined, leading to an ongoing production suspension. From an operational group perspective, North American, Africa, and Middle East operations met their production guidance for the year, while Latin America and Asia Pacific regions failed to meet targets. But despite guidance being met, things aren't looking as rosy for 2025. Those ongoing issues in Mali at Barrick's Tier 1 Loulo-Gounkoto complex have led to dramatically lower production guidance for 2025, like 19% lower overall. Attributable gold production for 2025 is estimated to be in a range of 3.15 to 3.5 million ounces, which compared to 2024's guidance is a decline of 775,000 gold ounces. For comparison, recall that Barrick produced 1.08 million ounces in the fourth quarter, meaning they're losing nearly the equivalent of a full quarter's production. But the lower guidance isn't just due to issues in Mali, which have been removed from guidance entirely. Guidance for gold production is lower across the African operations, even when you take Loulo-Gounkoto out of the equation. While guidance is also lower for the North American operations, primarily due to lower production levels expected across 3 out of 4 mines under the Nevada Gold Mines banner, and with lower production levels naturally comes higher all-in sustaining costs due to less ounces to spread fixed costs across. Guidance currently calls for an AISC of about $1,460 to $1,560 across Barrick's gold operations in 2025. On the bright side, copper production is expected to grow in 2025, with a guidance range of 200,000 to 230,000 tons being provided. All-in sustaining costs are slated to be in the area of $280 to $310 a pound, which represents a decline over 2024 costing. Capital expenditures for the year, meanwhile, are guided to being between $3.1 and $3.6 billion. The accuracy of this guidance, however, is already a bit questionable, considering that they are based on a gold price of $2,400 an ounce and a copper price of $4 a pound. The provided sensitivity chart suggests that for every $100 rise in gold prices, gold all-in sustaining costs will rise by about $5 an ounce. So expect costing to be at the higher end of guidance, if the current price of $2,900 an ounce is any indication. On the bright side, every $100 rise is also expected to increase EBITDA by about $450 million on a consolidated basis. So at the end of the day, Barrick probably isn't too concerned about it. All right, so the big question, how did the market react? Well, the market responded well to the results, despite the big cut in production guidance for 2025. It seems the market is willing to excuse the issues in Mali, given how much Barrick has been beaten up over the matter in recent months. The equity as of midday Wednesday was trading up nearly 7% on the TSX. And investors themselves, well, like the market, mostly positive. CEO Technician thought overall the results were pretty good, while highlighting the growth in free cash flow. John Davies was extremely pleased by the results, and even Mark over at IKN was generally pleased with the results, while later saying that record gold prices cover a multitude of sins. But not everyone was pleased, with one Twitter user thinking Barrick needs to be taken out back to the woodshed, with the rally being ridiculous given issues in Mali, weak production guidance, and the small buyback program. I guess you can't please them all, but I mean, come on. The $1 billion buyback program is like 75% of all free cash flow the company generated in 2024. How could you possibly want more? Maybe you want them to pay down some more debt instead? All right, so let's wrap it up. It was a good quarter and fiscal year for Barrick. Yeah, the price arguably masked some issues, as Mark suggested, and I mean, quite frankly, the guidance isn't anything to get really excited about. But that's the nice thing about a rising gold environment. And quite frankly, if we want to see any love in the smaller producers or junior explorers, we need to see the majors grab some positive momentum. This just might have been the ticket and is probably going to be the start, in my opinion, of a rally in the big producers in the gold space. And I think that we're going to see it all trickle down, and it's just getting started. All right, everybody, it is the beginning of earnings season. If there are any names you want us to cover the earnings of, ideally companies that actually have results, so we don't want to hear about explorer names, companies that actually produce stuff, or royalty companies, let us know in the comments section. We're happy to cover them if it makes sense. Also, if you enjoy this content, please give us a like. If you haven't already, subscribe. We appreciate all the engagement we get. Let's have a big earnings season, guys. Thanks for watching.